Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, we're back. Hey, we're both wearing blue. Very cool.
Yes, we are wearing blue.
Really brings out your eyes, your brown eyes. So what's going on, man?
Oh gosh, not much. Enjoying the nice weather, and we traveled this weekend. Went and saw some friends up in Pennsylvania that we haven't seen in a long time, and that we went to college with. So it was great. They have 5 kids, one of whom is our first godchild that we had, and so it's just great to see. She's kind of all grown up, like about to start driving, and
Wow.
time flies. It's crazy.
It's funny to see college friends with kids. And like, man, if your kids only knew what an idiot you were when you were in college.
Yeah.
Yeah.
These two were, pretty straight-laced people, so they're good people. I think they're the first people I've known to get married because they got married right out of college.
Oh, yeah.
Yep.
Yeah. We had a lot of those after graduation because everybody's leaving for an
Exactly.
assignment, right? So
Right.
you got to get married so you can bring the wifey along. Yeah. Well, cool, man.
Yep. Take me to the land of the big PX.
Yep. The commissary. Yeah. So we had another baseball tournament. We got eliminated because of a run differential, and we didn't even.
What is that?
Is
that a slaughter rule?
It's like pool play, and they do all these calculations. If there's a tie between maybe two teams to see who advances, they look at how many runs scored versus runs allowed.
Oh, I see. I got you.
We missed it by 1 run, but we didn't get to finish the bottom of our inning because we were a home team and we won. Like we got 3 outs at the top of the inning,
Right.
and the game's
Right.
over, right? Well, it turns out we could have finished the bottom of the inning and try to get more runs to advance, but we didn't know that, so we ended up getting eliminated pretty early on Saturday. So silver lining is I didn't have to spend the entire weekend outside at baseball games. Not that there's anything wrong with that, but man, I mean, we could have played like 3 games on Saturday, 3 on Sunday. Would have been exhausting. But so yeah, just about done with baseball now. So
Yeah.
moving on to
I was
football.
gonna say, is that it? We've been done forever.
Yeah.
Yeah, it's been nice.
Yeah. It is nice. We got a couple weeks before football, but we just got our football gear last night. Had the equipment handout last night, and yeah, Blake's pumped.
Who's playing football?
Just Blake, my youngest.
Just Blake.
Yeah, 6th grade football. So yeah, should be getting most of the coaches back together on the team and most of the players again on the same team.
Nice.
So that's fun. Yeah.
Yeah.
There's always at least one that I could say it's okay if he doesn't come back.
Yeah, no doubt.
Some kids are hard to coach just because they're entitled or,
Yep.
they don't work hard. Yeah.
Yep.
But it is what it is. I think I'm done coaching baseball though. That was my last summer.
Yep.
I'm retiring.
You don't have time. Yep.
Yeah. I mean,
Hang it up. Time to hang it up.
Time to hang it up, man. Yeah. So it'll be fun to just be a spectator. But yeah, man. Well, so last night my mom was in town. So last night 2 nights ago, my brother came over and we were grilling out and he finally got a policy, like he's got approved and we're ready to put his in force. So I'm just kind of doing the final tweaks on that. And he's like, yeah, he spent some time on TikTok and, following these Finfluencers. And he's like, yeah, I found this dude who said he really hates IBC. And he gave us top 10 reasons why. And he sent it to me. So I figured we'll talk a little bit about that today. But before we do, we got a quick tip for everybody. That
Yeah, a morsel.
Yeah, a little morsel. So Everybody, if you have a policy in force this week, call the company, call the policy services line and ask them, how much more PUA do I have the ability to fund this year? You know, or if a company uses a different term for the paid up additions, say that. They'll be able to calculate for you on the spot that, hey, your policy actually, like I discovered $30,500 of additional PUA I got to pay this year because I had fully paid my premiums, the base, the premium, everything. And between all my policies, I had the ability to put in another 30 grand. So I did that right away. But you won't know unless you call the company, because this isn't something, unfortunately, I don't think it's tracked on your online portal. It's not something you can see. You got to call them directly and say, and ask them that, how much PUA can I pay for the rest of this policy year? And then get online and pay it, or do it over the phone, whatever. But get more capital in there.
Yep. And I just found $10.84 for one of the clients.
Yeah.
Hey. And I said, I was like, hey, hope you're well. Every little bit helps. But on the flip side, I found what, Dave? $6,600 or something.
For you. For just
my
one policy
that I opened.
Yeah.
Yeah, for one of my policies. So, hey, that was great. So yeah, that's something I'm going to start looking at closer.
Right. So yeah, keep doing that, because the more, remember, in the first 7 years, they take the average of what you paid towards your PUA, and that's the max you get to pay from year 8 forward. So if you have the ability to pay more in the first 7 years during any of those years, pay more, because that's going to increase your average and allow you to put in more premium year 8 and beyond, where you're no doubt getting more than $1 for every dollar you put in, more than $1 in available cash value. Right. So
correct.
Yeah. So do that. And then once you fill that up and you're still stacking cash, it's time to call us and open up another branch to your bank. So there's got to be somebody else in your family or yourself that needs another policy going. There you go. Quick tip of the day.
Pure gold right there.
Pure gold. Yeah. Well, all right, man. So we thought we would take this top 10 list from this idiot Finfluencer. And I'll probably refer to him as a moron several times throughout this.
Is he on the TikTok?
He's on the talk. Yeah, I believe so.
Oh,
I'm not,
God.
but I believe he is. So this is where, what is it? We at a conference we went to, they showed statistics, and I'm afraid that it might be something like 50% of Gen Z gets their financial information and education from TikTok, Finfluencers.
Yeah.
Yeah.
Well, you could see these people, you know, whether you're out at a restaurant, at dinner, or wherever, and they're just
scrolling.
They're just scrolling, and you see like entire families just sitting there doing these things, right? And so it's not a surprise. You know, people have the attention span of a gnat nowadays. They don't want to read, they don't want to learn, they just want to, you know, be spoon fed. Give me the answers to the test in, 60 seconds or less, or 30 seconds or less. And the fact that people are getting financial advice or taking and heeding financial advice from 30-second clips from someone they don't know or haven't vetted is troubling to me.
Well, if they have 10 million followers, certainly other people have vetted them, so they're legit, right?
I think, well, maybe they're just good looking.
Herd mentality.
Yeah.
Yeah.
Or maybe they just have, they have a way of sending out that content that is just very appealing, and, they're little quips and they're quick and they make sense. And so good on them, but it's just, my goodness.
Yeah. Luckily,
people.
Those are not the clients that we come across. And frankly, one of the reasons I stay off of TikTok is because I don't want any of those clients. I don't want people like that. Those are not ideal clients. I want people who want to learn and want somebody to guide them through this. And that's what we do.
And of course, and the guy we're going to cover today, of course, in this case, he's not our competition because he hates IBC. So,
right.
Good.
Yeah. And, if you're going to listen to this guy and take his word for it without doing your own research, then that's your own problem, and there's nothing we can do for you.
So this is going to be part of the noise, folks, that we often refer to. It's just everywhere. If you watch any kind of IBC video on YouTube, it's going to pop up on the right-hand side. There's going to be good content. There's going to be terrible content. But clearly this guy, we're going to highlight, his 9 items here, but he doesn't, or 10 items,
10.
I guess. He doesn't know what the heck he's talking about. He doesn't understand whole life insurance or life insurance in general. He's just probably regurgitating what somebody else said, because that's
somebody else's misunderstanding, right?
Yeah, that's right.
Yeah. Well, and so why is it important for us to talk about this to people who probably, maybe most of our clients would know how to rebut these claims, but maybe some don't, or they're not comfortable yet doing that? It's because when you start talking about this to your network, your friends, your family, you're going to come across some of these same rebuttals from them. Like, oh, well, that sounds stupid. I've done my research on it and it's stupid for this reason. And it's going to be one of these. And when you hear that, you should probably just stop talking to that person and say, God bless, have a good day. Here's a book if you want to read it sometime. Because it's not worth it, because they don't know what they're talking about. But without further ado, why don't we jump into these? So let's see. He labeled these 1 through 10. I'll go through them in the same order that he said them. So he said top 10 reasons why he hates infinite banking. Number 1, a 50% front load the first year. So what does that even mean?
I don't know if he's talking about that brokerage that we got into, like at the beginning of our careers.
Oh yeah,
front-loaded mutual funds and stuff.
Front-loaded mutual funds.
Actually, it was 50%.
Yeah, they took half for the first year, and then they got sued,
half.
Class action lawsuit, and they had to pay us.
Yeah,
a tiny
got some
bit.
cash back from that, didn't we?
Yeah.
Hell yeah.
Yeah.
But I didn't see the video, but I don't know what the heck he means. Depending on policy design, is he talking about maybe you'll only have access to 50% of the premium as cash value that you paid? That's possible.
Right. Certainly. Yeah. I mean, you could design the policy to have far less or far more.
Yeah. I mean, Nelson talks about the capitalization phase. He talks about how, these astute business people that he references in the book say that they generally don't plan on taking a profit or money off the business for the first 7 to 10 years. So yeah, that's believable. If you want to call it front load as startup costs, maybe we're using just different vocabulary words here.
Yeah, I think you'll see a lot of his vocabulary is investment based, and front loading is certainly one of those.
Yeah,
back in the early 2000s, these front loaded mutual funds were the rage.
Yep.
Yeah,
I don't know if those are still like around at all.
I can't imagine.
Terrible,
man. I was an idiot.
Well. We don't know what we don't know, and
Exactly.
I didn't know anything as a young second lieutenant at flight. My focus was on not crashing.
Well, your focus is on being a tactical expert, and you don't have time to go focus on investing or anything else. So you just say, hey, these people are smarter than me. They've done they've got their degree or whatever, their certification. I'm going to give them my money, and they take care of it for me. At least it got me started doing something, I guess you could say.
Yeah. And they show you how $200 a month over 40 years is somehow magically going to turn into $1 million plus at age 60 or something.
It's compound interest. It's the 8th wonder of the world. Albert Einstein said it himself. It's amazing.
And of course, it's not even close to the truth of reality.
Yeah, unfortunately. Many people
not even close. But people are out there still. I unfollowed a Finfluencer that I was following on Instagram, and I would kind of troll in there a little bit and just be like, oh my goodness, what are you talking about? I was like, there's no way that's true. Or I'd ask, what actual rate of return uninterrupted did you use to calculate these numbers? And I remember it was something around 12.5 or 13%.
Oh my gosh.
I was like, there's no way that's going to happen. And people are just like, oh yeah, you're a boss, babe. Just like, oh my God, be quiet. You have no idea what you're talking about.
Okay. Nice.
Anyway, total Finfluencer.
Yeah. Well, so I put in our notes, there's no loading, there's only premium, and then you put some random Ghostbusters quote. I don't know that.
I did. I was just trying to be funny, and only people that know movies would get this. There is no Dana, there is only Zool. Anyway.
Yeah. Throwback.
Yeah.
All right.
But yeah, there's no loading. There's the cost of insurance, and we've
Yes,
talked
cost of
about that.
insurance. Right.
There's no deals in insurance. You can get all these different commercials for auto insurance, or come over here, come over there. If you generally do an apples to apples comparison, maybe you're transferring less risk to the insurance company for that lower premium.
Exactly.
And that's where that extra layer of the onion you need to peel back and just ask those tough questions like, okay, this sounds too good to be true, all things being equal. What are you doing differently from this other big, insurance company?
And that's exactly what you're doing. You're right. Because when you move your deductible from $500 to $1,000, your rate goes down. Why? Because you're transferring,
assuming more of the risk.
You're assuming more of that risk instead of transferring that risk to the insurance company. The insurance company is giving that risk back to you. Therefore, it costs less because it's less risk. It's all based on numbers. It's a science. So
yep, it's actuarial science. My deductibles are $1,000, by the way. I wish I could make them $2,000, but they won't.
Mine are $1,000 also.
Yep.
So, all right. How about number 2? Surrender penalties that last for years. So this guy really hates IBC because of surrender penalties.
Super precise with the numbers too. Like last for years. Well, how many?
Yeah.
So, okay. Number 1, there are no surrender charges for whole life insurance. I think what he's referring to is universal life. And this gets back to the problem of people saying they're teaching you IBC or infinite banking. They don't usually say IBC, they say infinite banking using universal life, typically indexed universal life, IUL. And of course, there are surrender charges for universal life.
Big time.
My least favorite insurance product on the face of the earth.
Yep.
Don't own any, will not sell it. But there are surrender charges that come with those policies. And people don't know that when they buy them. They have no idea. Very few of them that I've talked to have any idea that that's the case.
Yep.
So he's bottom line. This TikTok dude is flat wrong.
Correct. Yep.
100%.
All right. Number 3, requires ongoing contributions for decades. So he uses the word requires. So for decades, so 20, 30, 50 years, you're required to make contributions. Is that right?
Well, it's not a contribution; it's premium. I would say.
Good point.
I would correct his language there. You're not making contributions. This is not an IRA. This is not a 401k. You're making a premium payment, and when you hand that premium dollar over to the insurance company, that's no longer your money.
Yep.
The insurance company's money, just like your auto insurance or your homeowner's insurance. So no, for whole life insurance. There are what is called in the industry non-forfeiture options with whole life. Should you endeavor to pay whole life premium for your entire life until you pass? Yes. And those of our clients understand this. The policies will be the most efficient on the day you graduate.
Yep.
Producing many, many, many times over in cash value what you've paid in premium. Right? So if we're in year 40, maybe it's 4 times or 5 times what you've paid in premium that the cash value is increasing by after you make that premium payment for the year. So, but no, let's say, Dave, hey, I want to stop paying premium, at age 75. So, how old am I? 43. So, 30 years from now, 32 years from now.
Yeah.
Can I stop paying premium cold turkey?
Absolutely. You have many options. Yeah. So
yeah,
you'll have options like reduce paid up. You could just say, I don't want to pay any more premium. And they stop requiring premium for the policy. You have that option with whole life insurance. You don't have that option with like universal life. Right.
Nope. They leave that out when they sell it to you too, don't they?
Yep. You can use the dividend to pay the premium. You could just tell the company, just use the dividend, pay my premium. Because by that point, your dividend will far exceed your premium. If you've had it for 20, 30 years, like no problem. You could do partial surrenders. We don't recommend that, but you could, surrender part of it. You could use cash value loans to pay the premium. You could drop down to the minimum required premium, which is probably roughly half-ish of what your total premium is typically. Yep. Lots of possibilities.
Very flexible. I mean, it's so flexible.
Yeah.
Very flexible.
And he misses the point that you want to be able to pay these premiums, especially decades into the policy, because when you can pay $10,000 in a premium and your cash value, available cash value that you can take a loan against, increases by 15,000 or 20 or 30,000, yeah, it's a no-brainer, right? You want to pay the premium.
Yeah. Add some zeros to that. It's even more awesome.
Right. You know, $100,000 premium a year. Oh my gosh. Yeah. That's amazing what those things
so
do.
this right there, Dave, it just proves, like, number one, this guy he says he hates infinite banking, yet he has no idea because he's looking at it through the wrong lens and is incapable of thinking.
Exactly.
I wonder how many views that. You'll have to send it to me after. How many views?
Well, I'll have my brother send it to me, and I'll share it with you. How about number 4? Why don't you take that one?
Yeah, different. So we have some notes that I just noticed it. It's funny. Okay, so number 4 is difficult to rebalance with other asset classes. I understand what rebalancing, like, someone's individual portfolio means, like on a year-to-year basis. Maybe you're going a little more into fixed income or a little more,
equities or something. Yeah,
whatever, right? I don't know what he means. He's thinking of this. He's thinking of IBC, or infinite banking, as a product.
Correct.
He's not equating IBC and then the product of whole life, in that the whole life insurance contract or contracts that we own are just a storage facility for our wealth. It's the first stop for our wealth, right? And our wealth just resides there because it needs to reside somewhere, right? Until I have to do something with it. I'm going to finance my next vehicle purchase, which we've talked about for your son recently, or your wife's new car. Or we're going to, you have to finance the premium fuel that car requires or something.
Premiums recommended, not required.
Recommended. I told Dave when it starts misfiring in a few years to put a premium in it and some fuel injector cleaner. It'll be all right.
There you go.
But anyway, or I'm going to finance, a wedding someday, or a down payment on a house, whatever I want. He doesn't understand that that's how you use the process of IBC and the product of dividend paying whole life. He has no idea.
Yep, you nailed it. IBC banking is a process. Whole life is just a product.
It's a product. I hate to say it. I try not to be mean, but this he's stupid.
He's a complete moron. Yeah. If I had his name, maybe we would tell you. But I don't. All right, number 5, backed. He says, I hate IBC because it's backed by the guarantees of a single company and whatever you can get from the State Guarantee Association. So you, as opposed to something that's guaranteed by multiple companies, because I don't know anything like that, or something that doesn't have guarantees, he just stated 2 different entities that guarantee your money. One, a life insurance company, if you use the right one, that's been around for over 100 years. And 2, what's the backstop for the life insurance company? The state agency.
Which really means other life insurance companies just like it.
Exactly.
That's really what it means.
You're right. So multiple life insurance companies are backing that. Yeah. What a moron. So
yeah, he, again, just, ignorant. But if you're ignorant to something, like, don't opine on it.
I know, right? Better to be thought of as a fool than to open your mouth and remove all doubt.
Yeah, like, now everyone knows you're a moron.
Right. Well, except morons.
Except other morons.
Yeah. And guess what?
We're so mean on this one.
Morons don't typically have a lot of money to spend on whatever this guy is hawking anyway. All right. How about number 6? Requires you to pay interest to get your money. That's the worst one. Are you kidding me?
Yeah, this is just a huge, you got red flag there. It is. Okay. So I'll just state this as plainly as I can. When you take a policy loan against your cash value, you're borrowing the life insurance company's money. The money is not coming from your policy. They take your cash value. Let's say you've got $50,000 of cash value available as a loan to loan. You take $40,000 out. Well, the life insurance company is using that $40,000 of cash value that you had plus, as the collateral. Technically, it's the death benefit that's the collateral. But, of course, the cash value is the present value of the death benefit.
Right.
But anyway. So, again, no idea what he's talking about. You're using life insurance company's money. Everyone always obsesses over OPM. This is the best possible leverage you could ever have. And we talked about that in a fairly recent episode. This is the best possible borrowing position to be in, and it's the best possible lending position for the company because they've already factored in all the costs of the loan into the design of whole life insurance.
Yeah.
So it's fantastic.
Right.
For all parties.
Yep. So, and while you're leveraging that cash value, it's actually the entire amount is earning for you, compounding uninterrupted. So tell me where you can get that anywhere else.
I'll save you the search. Nowhere.
Where you going? Nowhere.
Nowhere.
All right.
What's number 6 here? We've got
that was number 6.
Nope, that was number 6. Number 7. Oh yeah, I like this one. Guaranteed negative returns for the first decade. We already addressed that in number 1, maybe? It's kind of similar.
2, the surrender penalties. Yeah, whatever. I think.
No, I mean like capitalization phase.
Oh, yeah.
Like
yeah.
the front load where there's startup costs, right? Like,
right.
Yeah. Like, and I've told people that up front, hey, you're going to be upside down for about 10 years. Meaning.
Yeah. I mean, could be less.
Could be less, could be 7, could be 8, could
Yeah.
be 12, but let's just say 10 years, you're going to, meaning every dollar you have paid in premium, you will not have access to that same amount in cash, generally.
Right.
But you know that going into it. This is not, again, this is the investment lens. There's nothing else from a place of ignorance, investment lens, and has no idea. Like, yeah, we acknowledge that. Don't care.
Yeah. And
I'm still in my capitalization phases for many of my policies. Don't care. It is what it is.
And I will be for my future policies for many years too.
That's right. I'm going to keep buying more insurance. I'm a buyer of life insurance. I'm going to keep buying it because premium's the solution.
But bottom line, it's not about rate of return. Read Nelson's book. Read the introduction to Nelson's book, and he'll state that this is not about rate of return of any kind. Number 8 here, low returns, even if you hold it for decades, it's not about rate of return. Number 9, must be held for life to provide even a low investment return. Again, it's not about rate of return, and it's not an investment. So,
my goodness.
Again, it's not about the process. He's not addressing the process of banking whatsoever. He's addressing a product, just plain and simple.
Yeah, and I guarantee you that that's the forgotten aspects, is that Nelson named the book The Infinite Banking Concept, and the concept is called The Infinite Banking Concept because it's about banking. It's about how one finances the needs of life, right?
Yeah.
It's not about, it's just, anyway. So it's just, again, lack of understanding, ignorance, stupidity, whatever.
Yeah.
Pick a synonym.
Yep. And then number 10, his last one, my favorite. He says he hates IBC because you're excluded from this investment if you have poor health or dangerous hobbies. Man,
not an investment.
Not an investment. That's kind of like, my opinion, that's kind of like saying you hate auto insurance because it excludes people with multiple DUIs and moving violations or people who are blind. What a moron.
Yeah, he's I like your comparison here. It's perfect. It's of course you have to qualify for it. You have to qualify for life insurance. You have to qualify for auto insurance.
Yeah.
And remember, I don't know if you guys had points in Kansas growing up, but in Massachusetts you had points.
I think so.
And if you got in an accident, raise your points. Of course, your premiums go up the next year, right, or the next renewal. And I remember my parents always talking about that once we started driving, my sister and I. And perfect comment. What a moron.
What a moron. And then I bet this guy loves term insurance, but guess what? Term insurance excludes people who are in poor health or have dangerous hobbies as well. there you go.
Same, yeah, it's the same thing. It also generally about 99% of the time excludes your beneficiaries because they will inherit nothing from those policies.
For term insurance, right?
For term insurance, right? So
that's funny. Exclude your beneficiaries. Haven't heard
exclude
it
your
that way
beneficiaries.
before. Yeah.
I just like to say, term insurance is there if you die, but whole life will be there when you die.
Yep. Very true. And it goes back to the fact that, again, he's referring to a product, not the process. If you're talking about the process of infinite banking, you're not excluded by having poor health or dangerous hobbies.
That's right.
Not at all, because what else do you have in your life?
You have other people, other insurable interests, maybe your wife, your children, business partner, whatever.
Grandchildren.
Debtor.
Exactly. So you have insurable interests. You can still do the process of banking with the whole life product, even if you're not the insured, because you get to own the policy. You can control it. You can fund it. You can take the cash value loans. You can decide who the beneficiary is, and you can pass that ownership on to somebody else later on if you want to. You can still do it. So
absolutely,
you're not out of the game.
And we do ourselves, don't we? We have policies on our children, our spouses.
Absolutely. Yep. Yeah. Well, there you go. So hopefully this may be this could be a good episode to share with anybody you run into who has these off the cuff, hip pocket comments from these Finfluencers. Like, that's a terrible thing to do because it's a low investment rate of return, etc. Just share a podcast with them. And, I promise you, we won't call them a moron to their face. But you see what they have to say.
Yeah, we normally don't do that kind of stuff, but it feels appropriate to them.
Feels appropriate for some people, like this guy, whoever he is. But yeah, most people, it's just straight up. They haven't studied, they haven't investigated for themselves.
Yep.
So it's more like, well, hey, if you're open to it, check out this 92-page book and let me know what you think about it. Because I was an idiot on whole life insurance my entire life up until
you owned it.
30 years old.
So did I.
Yeah, right. Yeah. And I was a complete idiot on the process of banking. Knew nothing about banking.
Right. Yep. I've owned whole life 20 years now.
Yeah.
20 years.
Yep.
Just not the right kind for most of that.
Not properly designed.
Although I'll say this, there's not really a wrong kind of whole life.
Right. Yeah. It just wasn't properly designed for the purposes of banking.
Right.
That's it.
Yeah. And the premiums I was paying relative to the death benefit, I was buying pure death benefit. Did it have cash value? Yep, sure did. No question. But just wasn't taught how to use it. This wasn't even a thought in my mind until you sent me that book. So.
Yep. Well, cool, man. That about sums it up. Hey, again, go back, call the company this week, call your life insurance company, ask them how much more paid up additions you can fund this policy year. They'll give it to you right down to the penny, and go ahead and max that out every year. Max that out. That's all I can say. Before even before you pay the loan back, max that PUA out.
Yep. And we've talked about that, haven't we, Dave?
Yeah.
PUA premium first, then work on the loan.
Yeah. Because it'll benefit you for the long term.
Yep. No question.
Yep. Well, right on, man. I think it's dinner time. So
yeah, I can hear the dishes clanking around. And the sink's going, and
that's a good sign.
Get those dishes done.
That's a good sign. Yeah. All right, man. Well, hey, good episode, and hey, we'll talk to everybody next week. And until then, control your capital,
or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.